Well, hello and welcome to another LinkedIn Live Q&A where I'm delighted to be joined by Nick Green, who is the partner of Fatgreen Consulting, or is it Fatgreen Insurance now?
Fatgreen Consulting.
Fatgreen Consulting. So, and we're going to talk today about the importance of protecting yourself and your business through a range of different business protection solutions. But before we get started, I just wanted to say welcome to Nick, obviously, and also we'll start with the name Fatgreen, where that came from. So do you want to start by explaining?
Yeah, sure. Thanks for asking. I lived in Hong Kong for 18 years. I went there initially as a young 28-year-old lad on a 2-year contract. And then before I knew it, 2 years became 3 years, became 4, became 5. And then before I knew it, I met my wife, who's from China. We ended up getting married, having kids, etc., etc. 18 years later, we then subsequently returned back to the UK 3 years ago. But to answer your question, which I think is a great question, thank you for asking, the answer is very simple. In Asia, the word far, spelled F-A, is pronounced fat, and that means prosperity.
Mm-hmm.
In the West, the color green is associated with growth and security.
Mm-hmm.
So Fatgreen, we help companies and families to prosper and grow in safety. So that's the name. So it's a derivative of Asian and Western culture and language.
Yeah, and I love that because when we first started talking, it was very evident that experience that you and your wife have had. Obviously you're originally from Newcastle, or the Northeast. You moved over to Asia. You've come back. You're now in Yorkshire.
Yeah,
you've come back over here and bring that expertise and experience of living in the West and in the East, and bring it back. And on your website, you talk about how the partners, you grew up inside of Hadrian's Wall. She grew up inside of the Great Wall of China. Just as walls offer protection, Fatgreen offers helps protect and insure you and your business. I think it's a lovely way to symbolize what you're doing. So great. Okay. So we'll talk about business protection solutions. So before I met you, I only really knew about things like professional indemnity insurance and employers' liability insurance and public liability insurance.
Mm-hmm.
So I've got professional indemnity insurance, and I have had the others at different times, but that tends to be insurance to protect me and my business against things that might go wrong when I'm dealing with clients or members of the public. But your insurance policies or services are more about protecting the business owners and the wealth assets within the business. So do you want to explain a little bit about that?
Yeah, sure. Thank you. Look, I think, I turned 49 last week. And even though I still feel young at heart, my kids still quite happy to remind me that I'm a bit of a dinosaur. But one of the things I've learned in life is that you just never seem to know what's around the corner. In my own life, my father died from a heart attack at 38. Not so long ago, my wife, a couple of years ago, my wife was diagnosed with breast cancer. And in my working life, I worked through the SARS outbreak in Hong Kong. And now the best part of, 18, 19 years later, I'm now subsequently working through yet another global pandemic. So I think I can say with a certain level of conviction and a certain level of confidence that we just don't know what's around the corner of life. And ultimately, having been exposed to some of life's nuances or challenges, I've also been a net benefactor of protection insurance. So, for example, when my father died, he died at 38 from a heart attack, completely unexpected. On the face of it, he was a fit, healthy young man. But we just didn't know at the time that he had a heart defect. And I remember the emotional roller coaster that my mother and I went through, and it was a horrendous experience, which I would never wish upon anybody. But now as an adult, looking back on that experience, I often think, how would we have coped, and particularly my mother, how would she have coped had we then found ourselves in a situation where not only had she lost her husband, their income had obviously taken a huge hit, Would we have then been forced to sell the house? Would we have then been forced to relocate, to downsize, etc., etc.? What other debt would we have incurred along the way? So as a byproduct of having had insurance, we were protected, our family was protected, and as a result of that, even though we had to deal with emotional loss of my father, at least home and day-to-day normal life stayed in place. And that's really, that's really what protection is there for. It's to protect individuals, it's to protect families, and it's to protect businesses from the unexpected events, which can ultimately have a really dire negative impact on your financial operation stability. So in the case of a business, one question might be, well, let's take, for example, a business founded by 3 people. If one of those people were to suddenly die unexpectedly, as happened to my father, where would their shares go to? And would the existing management team, the 2 remaining shareholders, would they have the power to buy those shares back, and could they actually finance the acquisition of those shares? Now, depending on the success of the company might be worth millions. So how do they suddenly raise the money to buy the shares back? You can borrow money, but then you incur very high interest. You can issue equity, but then you dilute your control at a time where you're trying to retain business control. One option is to have an insurance policy, a business protection policy, which is there to protect the business from such a loss of a shareholder. In the case of the loss of the shareholder, the insurance company would pay out a lump sum cash, which can then be used to buy the stock back from the deceased's beneficiary, therefore helping the existing management to retain control of the business, but not having to borrow money or issue further equity to buy that stock back. So what we do, Paul, is we basically ask the what if questions. What would you do if one of the directors suddenly became incapacitated, could no longer work due to long-term illness, or fell down the stairs and broke their back, for God, which happens? What would happen if one of the key members of your business died? How would you deal with it? Have you got a plan which would maintain revenue and operations? And is that plan properly financed and thought through? And the sad reality is about 50% of SMEs fail within 1 year of losing a key person in their business because they haven't got the wherewithal to affect change. And that's normally because they lack access to capital.
Wow. Okay. Yeah. I mean, these are all things that you just don't think about when you're starting a business. I think sweeping statement. I think most entrepreneurs or business owners are optimists. So they're always looking at the bright side, and everything's going to be great and everything's going to work out fine. So they don't really want to think about the things that go wrong until it's often too late. So obviously it's very sad, and sorry to hear that about your dad, and also about your wife. But I'm glad that she's recovered. She's doing well now. But yeah, I mean, those experiences, those situations can completely change the course of your life, your personal life. Also, completely put a business under. It can completely destroy your business and everything if you're not protected. So
I agree. I worked in executive search for the first 2 decades of my career, and I dealt with a lot of startups during the dot-com boom in the late 90s. I've had my own business since I was 32 years old. And you're right, you just don't think about the what if kind of scenarios, because when you're setting up a business, you're so focused and you're so excited about getting that business going. Everyone's pulling in the same direction because they have that laser-like focus trying to make money. But actually, if you take a lot of startup businesses, a lot of entrepreneurs set up businesses with the expectation of ultimately selling those businesses. And somewhere along the line, they need capital to be invested into their business to help them grow. So the question is this: let's take a high-tech business. In most businesses, when you analyze the management team, you normally have one person who's very adept at things like finances, operations, legality, etc., etc. Another individual may be what I call the sales, the marketing, the business promotion person. And then the final part of that triumvirate might be somebody perhaps who is exceptionally adept at technology. Perhaps they had the idea for the business in the first place. So what happens to the business if one of those people die unexpectedly? Maybe they have a car crash, God forbid. The challenge becomes 2 years or 18 months since the inception of the business, suddenly you take out one of the directors. What happens to that business? The other 2 directors will try and take on some of the workload, but they have their own unique specialities in that business. Could the sales director become a CTO? Probably not, I suspect, based on my experience in executive search. So having put all this money into the business to get it going, perhaps having secured alternative sources of financing, whether it be an angel investor or whether it be crowdfunding, what happens to that money? If they've had to borrow money to get the business off the ground as part of their seed capital, does the bank or the lender just write off the debt? No. But having just lost a key member of the team, what is the likelihood of the business succeeding and achieving its full potential? And I would argue that unless they can find a replacement solution, then the chances are it will probably fail. So the question is then, well, how do you go about finding a replacement? And how long is it going to take? And how much is it going to cost? In my experience in executive search, getting someone to join a newly started up business is never easy. And finding people with the right level of experience and skill set is not easy. So they may be looking at a process which might take them anything from 6 to 18 months from the point where they start the search until the point where the person's started their job and they've had time to gestate and get their feet under the business. In the meantime, who's going to take up the slack? Do they need an interim solution? And if so, how much is that going to cost? So quickly the costs start to escalate. Faced with the loss of a director, the business has loans against it. They need to find a replacement. In the meantime, if it takes 18 months or 12 months to find a replacement, what do they say to their investors, their clients, their suppliers? Who's going to step into the breach and take on the work of the director who's no longer there in order to keep operational sustainability going forward? So all these questions suddenly come to the forefront. And unless the management team have had the foresight to think about these issues, and they've got a succession plan which has been well costed and there's access to finance to execute that plan, then the reality is it's probably going to end in failure. So how can insurance help? What do? We ask the what if questions. What would happen if this happened to your business? What is your plan to get through this? And then once we understand what the potential challenges are facing that business, we take time to reflect, and we come back to the client later on with 2 or 3 different insurance options. So should they be faced with that kind of situation, the insurance company will pony up and pay them a lump sum of cash. With that lump sum of cash, the existing management can go to their investors, clients, suppliers, people they employ, and say, look, we've been faced with this terrible situation, but let's not panic. Okay, we are a progressive, forward-thinking management team. We had the foresight to think of some of these issues. And as a result of our focus, we've actually been able to basically make a claim against our insurance policy. So as a result of that, we've now got capital in place, which we can use to hire someone new and fund an interim manager in the meantime. Equally, they may decide to use some of that money to write down some debt. But going to people with a plan is a lot more effective than rocking up to see clients and colleagues and investors, etc., and saying, we've been faced with this, we don't know what to do. Can we borrow some more money?
Yeah, the answer is probably going to be no, isn't it? If they do that.
Yeah.
So No, it's great to be talking about this stuff, because hopefully people we're going to be sharing this through the Start a Week community and more widely, so that anyone who's not only in business now but starting out in the journey can start thinking about it now. Because there's a range of different solutions in that. So we've talked there about the key person protection, business loan protection, relevant life protection, and shareholder protection.
Correct.
So they're like the four main types of protection that you offer. But how do they all link together? Like, do you need all four, or would you normally recommend getting? Well, obviously, if you can get all four, if you can, but how do they link?
I guess ultimately it's a judgment issue, isn't it? And that's part of the value that we have to clients. We sit down, we understand what their business is today, what they see as their future objectives, how are they going to get from A to B, and then once we start to paint that mental picture of what they've got or what they don't have, for example, then we're able to then work out which bits of business protection they need. They may not need all four pieces. In fact, most clients don't. But it might be that a director has taken out a business loan 5 years previously, and as part of that loan, he or she had to sign a director's personal guarantee and provide their family home as collateral. It may well be that it's somebody in the business who owns 100% of the shares, in which case if they die, they go to their wife, end of story. But it may be that there's three partners in the business who have different shareholdings as a percentage of the overall amount, in which case if one of those people dies, how do the other directors get the shares back? So in each case, what we do is we look at the business, we work out where does it want to go, what is its exposure at the moment, and is it likely to grow, and if so, by how much over the next 4 to 5 years? Once we've garnered all that information, then like all good service sector professionals, we come back to them with a solution based on what we believe their needs are going to be over the next 4 to 5 years. Sometimes it's all four. In reality, it might just be 1 or 2 of those bits of insurance.
Okay. So it is obviously unique to the situation and the business, but you need to get to know them first. And I know that you do offer free telephone consultations, don't you? It's like 30-minute consultation just to get to know people. So
exactly. Exactly. I mean, first of all, we have to establish, is there a real need? Are we the right kind of provider of insurance solutions, etc., for businesses? And we normally do that via a Zoom meeting like this. If it transpires that yes, there is a very real need there, and yes, they do need a solution, then it's nice to get out and actually meet clients face to face and find out more about their business, which I just think is part of the overall service. And it's interesting.
I was just going to say, so if anybody does want to get a consultation, just book it. Just go to your website, fatgreen.co.uk, and they can just register their interest for a call or a Zoom chat that way.
Absolutely.
You might not be able to say. I was going to ask,
I hold my glasses. I probably won't be.
A rough idea of cost, or like for an insurance policy.
How long is it? Honestly, Paul, it's like saying how long is a piece of string. Age obviously has a significant impact on premiums. Obviously, the younger you are, the earlier you start to insure yourself and your business, the cheaper it is. The longer you leave it, the more expensive it becomes. Equally, it also depends on the value of the business, and how much you're actually looking to insure. So rather than start by saying, well, what's your budget and how much do you think you can afford? What we do is we sit down and work out, well, what is the need, first of all? Once we've established the need, then we're able to then work out, to start running quotations and see how much it's going to cost to provide that, to service that need. Now, sometimes it may well be that once we've established the need, once we've run quotes, the monthly premium is just too much. In which case, we have to then start stripping it back. We have to say, well, what is absolutely critical? Which bells and whistles can we take off the cover? Or what is absolutely critical? So we can then start to get the solution to a point where it will deliver on what the client needs, but at a more cost-effective price point.
And
I think actually there's a really important point here, because so many people, I think, fall into the trap of saying, what's my monthly budget? And then buying an insurance solution which is in line with their budget. And I understand why they do that. But of course, the pitfall is they end up buying something which A, perhaps they don't need in the first place. It's too much cover. Or B, actually as a byproduct of going with that approach, instead of having a fixed monthly budget, they actually end up being underinsured. And when they come to the point of claim, then they find out that actually the cover doesn't provide the kind of cover which they initially thought they did. And I actually think this is a really big problem for the industry, because so many times we hear about people who've had a bad insurance experience. But I fundamentally believe that one of the reasons why people have a bad insurance experience is because they end up buying something they don't need, or something which doesn't provide the level of cover that they wanted, hence the disappointment. And you know, one only has to look at online websites which promote solutions based on the lowest cost. Whilst I understand why they do this, I'm not necessarily sure that they actually provide the level of solution that people are looking for. And that's really where we hope to step into the breach and make a difference, because, you know, we've bought insurance ourselves. We're very experienced in the industry. We have a lot of insight, judgment, experience, and we leverage that to ensure that our clients have the right solutions, not necessarily the cheapest solution.
Yeah, no, I think it is an important point to make, because you're right. You know, sometimes people will they have to get some insurance. Maybe if they go on holiday, they just think, oh, well, I just need some insurance, and I'll go for the cheapest option, and they don't really care what they're going for. But something as valuable as your business, it is worth the time and the effort, and maybe paying a little bit more to be protected fully. But that's where you come in to make sure.
I mean, for most people, I mean, let's look at the facts. The facts are approximately 60% of all working adults in the UK work for SMEs, which employ less than 10 people.
Yeah.
Okay, now that's a huge percentage of people who work for SMEs. And for the owners of those SMEs often represent that owner's lifetime's work.
Mm-hmm.
They may represent that owner's future pension. You know, so the question you have to ask is, well, if that represents your lifetime's work achievement, and if that business is ultimately going to be your future endowment or your pension, then actually the question is not how much is it going to cost to cover it. The question you should ask is, how much would you afford to lose? Could you afford to lose by not having it insured?
Yeah.
And that's the approach we adopt. Now, like all these things, as you say, ultimately there comes a point where, yes, budgets do matter, because money sadly doesn't grow on trees. But like many things in life, the challenge is finding the sweet spot in the middle, having enough cover at the most cost-effective price point, and that's what we pride ourselves on achieving. Yeah,
brilliant. I've got a question here. Like, can you get the protection retrospectively? You can't. So, like, if you've already taken out a loan, you can get out the insurance, or is it best to do it early on before you?
We find that actually a lot of people seek to review their insurance on a timely basis. You know, if you look at businesses, families, they're constantly growing. Sometimes they grow, sometimes they shrink. But with that, as we go through that journey of life, that cycle of life, our insurance requirements change as well. Now, you know, I am at home with wife and 2 kids, and I consider myself extremely blessed and lucky for that. But in 20 years' time, once the kids have flown the nest, my insurance requirements might be different from what they are today. And it's the same with businesses, particularly for startup businesses. One of the challenges of securing the right level of business protection insurance is being able to calculate what is a fair value for the business, not just today, but where do we think that business might be in 1, 2, 3, 4 years' time? You know, what is the growth projection? You know, et cetera, et cetera. So there's a lot of different moving parts which go into calculating that valuation. But ultimately, in answer to your question, do people review their insurance on a retrospective basis? Yes, they have to, because life is never static. It's constantly evolving. Insurance involved with it. Yeah,
sure. Okay, good. And you touched on it a little bit before, just a bit about your background.
I'm just going to shut the door. 1 second, please.
Yeah, go on. I think your dog came in before.
She did. Yeah, very nosy. Sorry.
It's all right. Yes, you touched on it a bit before about your background, but just want to say a little bit more about the experience that you've had and your wife Annie has had as well.
I mean, look, sadly, Annie
and
was
how
diagnosed.
that's influenced what you're doing now.
No, I understand. I mean, sadly, Annie was diagnosed with breast cancer 2 years ago. She doesn't smoke. She's allergic to alcohol, so she actually can't drink alcohol. She's slim, fit, etc., and has a healthy diet. So against that backdrop, even though I have no medical background, I would argue that statistically, she was someone who was at very low risk. But there we go. That's life. You just never, ever know what's around the corner. And yeah, it does. There is, when I look back in my own life, my own experiences, things like that, events like that, definitely force us to reflect. And without wishing to sound like I'm on some kind of moral crusade, I'm not. But I do hope to be able to look back in the future and say, well, actually, as a byproduct of our own life experiences, we're actually able to share those with people in a way that actually helped them and protected them. And that's, for me, insurance is actually quite a noble industry to be in. Because I know just how hard it is, how hard we work to build and create and achieve. And I've experienced firsthand how easily life can be turned upside down like that on an absolute dime. So I just think, having been through that, having experienced that myself, if I can somehow reflect on life later on and say, well, actually, through negative events, I was actually able to help protect people in a positive manner, then that, for me personally, is actually very, very rewarding. And it is part of the reason why we do the job. Particularly dealing with entrepreneurs, people in startup businesses or companies who perhaps have just secured growth capital and are looking to expand and grow going forward. I look at these people in their 30s, and it reminds me of myself when I had my own business. When I was in my early 30s, all the enthusiasm and the vigor and the vim and the drive and that desire to get out there and actually build something. And as I reflect on myself when I was in that situation, I was so focused on the end goal that I didn't stop to think about some of the pitfalls along the way. So now in my late 40s, if I can somehow bring to bear some of those experiences I had and share those with people in a way that helps protect them and their achievements, then actually that's really, really invigorating and rewarding.
Well, you can tell you love it. It's in your blood on entrepreneurship and having built and grown your own companies and the help and advice and support you've been giving me in recent months. I've really valued that as well. The advice.
That's really kind of you. Thank you.
No, seriously, not just away from Fatgreen and the conversations we've had around my business and what I'm trying to do with that, both yourself and Annie. So Annie, she was an investment banker and a CFO for a high-tech company in Asia and America and now Yorkshire. So yeah, she's very, very experienced in the whole world of
Annie's had an amazing career. I mean, she worked, grew up in China. China then, compared to today, was a very different country. But she worked very, very hard. She went to the US to study her MBA, and she ended up working for Bechtel Industries and project finance. Then she moved back to Hong Kong just before the handover, and ended up working for JP Morgan, then UBS, working with a lot of high-tech companies in China who were looking to list on either the NASDAQ or the Shanghai Composite or the Hang Seng, as well as advising on their M&A strategy. So she's had a lot of experience internationally with working in China, as well as obviously advising companies in Europe and also having worked in the US. So she's smart. She's the brains in the family. It's what I call the brains in the family.
Well, but I think that really sets you apart, though, from maybe others that work in this line of work. That experience, that genuine world class experience of working with the West and the East as well is it's definitely a bit of a USP for you in Fatgreen. And then there's the third person involved in as an advisor up until now.
Yeah, Peter is our non-exec director, and Peter has been in the insurance industry all his career. I mean, I don't think there's anything about the insurance industry that Peter hasn't been exposed to. I mean, he's very successfully built businesses up and then sold them. And actually now, from time to time, he advises international investors on distribution businesses and whether or not they're worthy of acquisition. So collectively, we form a really strong nucleus. Peter obviously is is the most experienced out of the three of us within the insurance industry. Annie, having worked in corporate finance with UBS and JP Morgan, has an enormous amount of business management and financial services experience. And there's really very little she doesn't know about mergers and acquisitions or raising capital and or buying and selling businesses to and from private equity firms. And then myself, I'm a natural entrepreneur at heart. I've had my own business since my early 30s. For the first 2 decades of my career, I dealt extensively with human resources, specifically, placing middle to very senior level management into a variety of different type of businesses. So when it comes to attraction, retention, staff benefits, how we can use things like relevant life protection to make companies more attractive and to increase loyalty and productivity, these issues that I've had a lot of experience with. So I just think you're right, and it's very kind of you to highlight our USP, but I think, whilst I wouldn't wish to pass judgment on any of our competitors, we have some great competitors. I do feel that we are unique in terms of, collectively we form a really, really strong team with a huge amount of experience, and we do bring that experience to bear, not just in providing insurance solutions, but as you've experienced yourself, being able to talk about a broader range of issues. And I think this is really important for entrepreneurs, because when you're running a business, it can be very, very lonely sometimes. I know from experience. Staff always demand X and Y. And sometimes you sit there thinking, why am I doing this? But that goes with the territory. But sometimes having a confidant or a trusted advisor that you can turn to and have the opportunities to brainstorm things, whether it's about insurance or whether it's just a general business issue, I find that's enormously beneficial. And that's one of the things that we seek or hope to bring to the table in terms of our proposition. Ultimately, we're here to insure and protect, but we also see ourselves as a trusted advisor.
Yeah, I think that's the right words to use, trusted advisor, because it's yes, the business protection, but it's the experience and the genuine understanding of what it's like to build businesses and the challenges that can come along the way that you've got. Which I think most business owners they prefer that. They prefer dealing with people who understand where they're at and have had similar life experiences or work experiences as well, more than not to downplay people, but if someone had never run their own business and they were just selling business protection solutions, they wouldn't necessarily have that rapport or that affinity with them. But if it's entrepreneurs and leaders, they will with you and Andy, and definitely.
Look, I think we should never underestimate the power of empathy. I think being empathetic and being able to empathize with people, no matter what walk of life you're involved with them, whether it be business, politics, whatever, but being able to empathize is absolutely critical, because through empathy, we start to develop understanding. I believe that through understanding, we start to founder confidence and ultimately trust. And ultimately, at the end of the day, business, in my view, is very simple. It's about one person wishing to buy, the other wishing to sell. Why do transactions either succeed or fail? It's normally predicated on trust or a lack of thereof.
And you want both parties to feel like they're both winning, that they're both going to win by coming together, not like the Donald Trump way of doing business where he's got to win all the time and someone else has got to lose all the time.
Well, I wouldn't possibly comment on Donald Trump, as you know, but there we go. You might say that.
So I mean, a lot of your business has been, still very pretty early days in your business, because most of it's been during COVID. So it's now obviously the lockdown's easing up, and you're able to start having face-to-face meetings hopefully soon, if not already. So things are really going to start taking off for you now, I think. So is that what
I'll share with you, if I may, a very interesting experience which I wrote about this morning, actually.
Okay.
I mentioned to you earlier, when I was in Hong Kong, I worked in Hong Kong during the SARS outbreak.
Mm-hmm.
And that was a very surreal experience, because, of course, the rest of the world was booming. But yet, despite this, we were trapped in a very small geographic enclave, and we were exposed to the SARS outbreak. But there were some very strong parallels which I draw both today, where we are now, and where we were, or where I was 17, 18 years ago.
Mm-hmm.
And I must just temper this by saying I am an eternal optimist at heart. I think you have to be as an entrepreneur.
Yeah.
But what I did experience post-SARS in Hong Kong was a significant boom in the economy. It was as though all that pent-up frustration, that lost time, suddenly people wanted to play catch-up. They wanted to rebuild. They wanted to drive forward. And there was a renewed sense of optimism which came across in the sentiment within the broader business community. And I sense that today in the UK. Increasingly, over the past few months, there has been, in my view, a sense of renewed optimism. And it seems to be gathering pace.
Yeah.
Now, I'm not an economist, as you know, and I'm certainly not a sage. But the fact that Jez Staley, who is the global CEO of Barclays, alluded to this in a statement a couple of weeks ago, I think he carries a lot more weight than I do, but I also find it extremely reassuring. And I hope that in this case, history is going to repeat. I hope that we see a similar economic bounce back as we saw post Hong Kong. And although I'm not a gambling man, if I were, I'd put money on the table with absolute conviction and confidence that we are going to see an economic rebound.
Okay, well, that's good. That's drink to that. If I had a drink, I would drink to that. Because I think you're right. I've definitely noticed. I think once when the spring budget came out, and then once the roadmap was laid out of easy coming out of the lockdown, I definitely noticed the difference. Then people seem to be more willing to do business and spend money. It's still some people more so than others, and definitely a lot of people have really struggled during the lockdown, and some have done really well out of it as well. But definitely, I think now the collective people just have to believe. Like everybody has to believe that things are going to get better.
Yeah, I agree.
Go for it now.
I also think there's another dimension here as well, which you've just touched on, which for me is fascinating. I think if you study history, in every epoch, you will find that there were events which accelerate change. Now, if I give it a great example, at the beginning of the Second World War, and don't quote me on the stats because I may be slightly wrong here, but at the beginning of the Second World War, it took the Americans about 320 days to build a Liberty ship, which plowed across the Atlantic, delivering goods to the war effort in the UK. By the end of the war, they were cranking those out in 80 days or 82 days.
Wow.
So it shows you what the power of change can do and how it can influence and drive people. Yeah. But I see a similar thing now as we start to emerge from COVID. It's very clear to everybody that certain industries which were struggling before COVID may never re-emerge in the same shape they were pre-COVID. But by the same token, the fact that you and I now having this conversation in a digital environment with people broadcasting in globally, that says to me, that from my mind is an example of change and how change is really driving new economies. So coming back to the UK, having lived in Asia for 18 years, it's been fascinating to see all the activity. And as a Geordie, someone who grew up in Newcastle, lived there for the first 20 years of his life, I'm incredibly proud of the achievements the fact that Goldman Sachs has announced they're opening an office in Birmingham, the fact that the Department of Trade and Industry is moving up to the north, recent investment that Hartlepool has secured. When you look at organizations such as British Volt, these are leveraging the skills and they're harnessing the capability of the north in the same way that we did 150 years ago in the Industrial Revolution. The product has changed, but the will has stayed. And it's that will which differentiates us. And it's that will and that energy which will give and is already giving birth to new industries. So I would say to anybody in the startup network, now is a fantastic time to be building a business. Now is the time to be finding the seeds of growth for the future.
Amazing. I love it. That's a great way to end. Okay, good. So thank you very much for that. So if anyone wants to find out a bit more about you or wants to have a chat, like you say, you can have a free consultation over Zoom, just like this. Best thing to do, well, they can obviously contact you through LinkedIn directly, or they can go to the website and book it through there. So it's fatgreen.co.uk.
Correct.
Awesome. All right.
Love it. It's been great to see you again.
Yeah, you too. All right, we'll leave it there. Thanks very much, Nick. Okay.
Take care. Cheerio.
Bye.